All right, guys, welcome back. Episode 11 of The Deep End. And let's just get right into it. Ari's got at least one big announcement for us today. So, Ari, I'm gonna pass the torch over to you, pass the floor over to you. What do you got, man? What's the big news? Here's the drum roll for you.
I love the drum roll. Thank you. Thank you. I have actually multiple, updates, if you will, but there's one big one that I'm just excited to tell Ryne because last chat we were on here talking all about marathons, and I've been watching Ryne's stories, and he's running his marathon over in Vegas, and I'm like, man, I feel like I should run a marathon. My brother ran a marathon back when. My uncle was a marathon runner. He actually ran in the Boston Marathon when the Boston Marathon bomber, that whole thing happened. And he was 1 mile away from the bombing.
Holy
Anyways,
cow.
I am going to run a marathon. I'm doing it, man.
So you posted... Oh, go ahead. Sorry. My bad.
The kicker is it's 30 days away. So I got 30 days to really, get my groove and gear here. And I think it's crazy. I think it's absolutely crazy, but I think it's crazy doable, as Ryne, you saw in my story. And so I'm starting with that exciting news because it's just in all areas of our life that I just feel like we can all just do better. We could do more. We could do better. And, as I was watching Ryne's stories and this consistency in the running, and all my other friends who run marathons also very consistent. And I'm like, you know what? Why not? Why not? There's a marathon in the city I'm in, and so I'm going to run it. It's a half marathon coming up. So I'm going to go for it, man. In 30 days, I'm going to give it my all. We'll see what happens. And I think this is just, for me, a very exciting announcement and an exciting opportunity. And it's all just to show me, myself, that I can do it. And it's all consistency, building one day after the next day. So that's like the big announcement. But I also have some financial announcements, which I think are going to be pretty cool to share with everybody. First of all, Ryne, how much money do you think I spent last month in terms of buying stocks? Because I know I told you quite often, like I'm buying. I have a video coming out on it soon.
Let's see. If I had to guess, I'm gonna say somewhere between 15 and 20,000.
Nice.
If I had to guess.
Nice. About $17,800 roughly. And I actually looked into exactly where
How much
all
was
of
it? I missed
went.
that.
About 17,800. A little more.
Okay. Wow.
But where did it all go? And I think that's where it gets interesting. A lot of it went into Google. Almost 6,000 went into Google.
Okay.
And then I had the rest split there between VOO and VGT. And now we know, as of this, recording, where the market went. So was it a good idea or not? I mean, hindsight's 2020, so no one knows that this hiccup was coming. But I think I'm just about ready to dump another $8,000 into the market as we roll into this week and talk about portfolio hits. I saw, Ryne, you were posting yours on Instagram, and I gotta say, yours has been minuscule compared to mine. Looked at my portfolio as the market was tanking down about like almost 15 grand, and it didn't even trigger me at all. I just said, about ready to dump another $8,000 in, because I mean, just the other day we saw it tick back up, but there's so much fear out there regarding like the Trump tariffs and how it's all going to play out. And I'm just saying, is anybody thinking long term anymore?
Well, that's a really great point that you bring up. I want to circle back to the marathon stuff here at some point in the conversation, because I'm really stoked to talk about that. But yeah, I think this conversation right here, just talking about what's going on in the market right now, your portfolio dropping, the fear in the short term versus maybe potentially having faith from a long-term perspective. This is a perfect tie into a question that I recently received in an email that I thought would be good for us to talk about today. Because I think this same, pretty much what you said, and also the underlying question here and thought process in this email that I want to share. I think that a lot of people watching right now are probably feeling this same thing. So I thought it would be a helpful conversation to have. This question comes from my friend Konstantinos, and he said, I just wanted to ask you for some friendly advice. I bought kind of like you, I bought 8 grand worth of Vanguard's S&P 500 ETF a month ago, back in February, when the price was close to the peak value. And I'm wondering now with the crash, what should I do? Should I sell and take the 5% loss and then buy again at the possible low whenever that comes? Or should I hold on to it and buy even more at the, just every time these dips occur? Basically, should I sell now and wait for better prices and buy back in? Or should I just continue to hold strong and keep buying? What would you do?
That is the golden question. And I would say, if I had the ability to predict the future, I would be more than willing to sell and then buy in at a, hopefully, or if I was able to predict the future, just the lower low, the true valley. But the unfortunate reality for all of us is that we can't predict the future. And so you need to just understand, if you are a younger investor and you have time to just sit tight and enjoy the ride, it's going to be a heck of a roller coaster ride throughout the decades that are going to be coming our way. But if you're just able to sit tight and not panic and enjoy that ride, you're going to be fine. And so that's to say, I wouldn't sell. I just, you can kind of hit yourself in the face and be upset with yourself. That's fine if you want to take like 5 seconds to do that. But it's actually funny because that's, this morning when I was investing last week, I was like, okay, will it be lower? It will probably be lower, because I was anticipating Trump tariffs. How's the market going to react? Of course, as we got closer to the date, market's more fearful. We were getting data that was depicting that the market was getting fearful. We saw the market notching down over the past couple of days to the past couple of weeks. So it wasn't like I was totally surprised, and it wasn't like I dumped all 17 grand in, at the peak weeks and weeks back. I started to dollar cost average in as it was sliding to hopefully catch the valley, which I didn't. But now this week, maybe I will when I dump another 8 grand in. That's all just to say, you can't time the market. You'll never know when the actual, peak or valley is going to be there. So dollar cost average. And I want to say this, and I actually want to loop it all back to the marathon. What is this marathon? Like, why am I so excited about it? Yeah, it's like a personal thing, and I can get my mind onto something else. And that's the goal there, right? What I just said. Get my mind onto something else. Don't focus on the market. Just dollar cost average into the highest of quality companies or positions, if it's an ETF, and do nothing else. Just sit tight. Focus on other things. When you start to focus on the market and you start to focus on your actual, share price, where that ticker, how much that ticker costs you, now your stomach is really, I'd imagine, turning. And how could it not be? One day it's up, one day it's down. I'd feel, sick. But I don't look at the market on the day-to-day, in that it's part of my job. So I know what's going on, but I don't look at my portfolio and say, oh, I'm down X percent. Should I sell? I say, oh, I'm down X percent and I'm invested for the next few decades. Let me buy more. Let me buy more. Let me buy more. And so just like I said, this upcoming week, another 8 grand is going to be dumped into the market. And although I'm down about 12 to 15 grand, this is a really exciting time, because the opportunity is here now for the long-term investor. But Ryne, I'll throw it to you.
Honestly, I don't know how much more I can add to what you already said, because that was just so spot on. I will say, though, like, the beauty of, and the whole point of investing in things like VOO or VGT or any other ETFs is exactly what you said. You do that so you don't have to think about this stuff. You do that so you can create a hands-off, automated wealth-building machine that you just feed over time on a consistent basis, and it kind of just takes care of itself. So yeah, don't when it comes to the S&P 500, don't feel like you need to try and time your buys into the S&P, because the whole reason it exists and funds like that exist, ETFs like that exist, is so you don't have to do those things. Go, go take a walk, go sign up for a marathon, train for a half marathon, or like Ari said, just go live your life. It's going to take care of itself in the end. And you have to think about the big picture. You have to think long term, not only moving forward but also looking to the past as well. The S&P 500 in the stock market as a whole has persevered through wars, recessions, changes in interest rates, pandemics. It's withstood the test of time, and tons of trials and tribulations. And sure, it's had its short-term blips. It's had its days where it's down 1%, or it's weeks like this one where it's down 2% or so, which is really nothing. Um, so it's had these periods of time like what we're going through right now. If this is your first time going through it, just know, like, take it all in and understand how it feels now. But also keep in mind, this is probably the worst it's ever going to feel, because the more drops like this that you experience, the more you get used to it. You kind of become numb to it, and it's just kind of like, it's just another Wednesday. It's just another Tuesday. And the same becomes true on the other side of this too. If your portfolio or the S&P is up 1% on any given day, it's exciting, but it's just another Thursday. It's not that big of a deal. I mean, it's nice, but it's not gonna make or break you either way, whichever direction it moves. So just know, like, big picture, long-term perspective, things are going to be fine. And even though the market's had its blips, it's had its hiccups, over the long run, it's been much more rewarding to investors than it has been vengeful. So always keep that in mind, and keep the faith too. If you think that the economic activity of our country is just going to continue to grow over time, which we have no reason to believe it won't, then you should feel good keeping your money invested in something like the S&P 500. So that's pretty much my take there.
I hate to throw in the classic or cliche dad joke, but it's a marathon, like you got to take it like that. This is not a sprint here, unless you are the investor who came very late to the game and you got 5 years left. But I'd imagine the vast majority of viewers out there are of the younger demographic. I know we have a lot of we actually do have a lot of viewership that is in their elder years as well. But I don't even when people are like, "Oh, I'm older," and then they're like, "How old are you?" 40. I'm like, "You're fine." Like, how old are you? 50. You're still fine. You're fine because you have a decade plus to go. And that is a long time to allow your money to compound. But I also want to say this. I think this is an interesting spin-off of this question. Let's go in the alternative direction and say somebody was investing not into an ETF, but into an individual stock. Ryne, would your suggestion change if it was an individual stock over an ETF?
It does kind of change things a little bit. Just how you look at the share price doesn't change, but one thing that you do have to be more mindful of is the underlying business. If you're talking about things on an individual company level, I do think now would be a good time. Excuse me. Now would be a good time to probably take inventory of your holdings if you do own individual companies, and just take a little bit of time to revisit their financials and just make sure, at least from what you can tell, make sure that they seem prepared to weather whatever challenges might lie ahead. And we don't know what that's going to look like. The market next week could just as well go back up 2%, and we could be back at all-time highs again next week. Things are just so flippant right now. But yeah, I would take inventory of your holdings and just make sure that everything is how you thought it was. This is good practice to do anyway, because if it's not now, there will be a point in time where the economy is going to fall on hard times, and revenue and earnings for some businesses might suffer. So you want to make sure that your businesses are prepared to withstand that. And basically that just means look at the balance sheet, make sure they don't have a crazy amount of debt. Make sure their profits are stable, their profit margins are stable, stuff like that. It's very simple stuff. But I'm glad you brought this up, because I was going to bring up you buying Google. You bought Google, a ton of Google last month, and I don't know how much it's down this month compared to last.
I don't want
It
to talk
might be
about it.
high. It might be high single digits. I don't know, but I do know others like Nvidia, um, Tesla, which I don't know how many of us care about Tesla here, but Tesla, Broadcom, those all saw double digit drops just in the last month. Um, and the thing to think about though is even though the share price is down, has the business changed at all? Like in the case of Google, even though the share price has come down some, has have the fundamentals of the business changed? Is revenue down? If the stock's share price is down 8% in the last month, is revenue down 8% in the last month? Are earnings, our free cash flow falling off a cliff right now? If not, if things still look to be ship shape there, then there's really not much to worry about. In fact, it's actually something to get excited about, because now you can buy this business, which is still firing in all cylinders. You can buy this business at a lower share price, which means you're going to get more bang for your buck as far as your investment dollars go. And if it's a dividend payer, along with that, you're also going to be able to lock in a higher dividend yield at that lower share price. So, when share prices go down, opportunities can rise. And so when it comes to whether it's an ETF or an individual company, I think that's kind of the way to look at it. And it's not easy to do when you're in the heat of the moment, when it seems like the ship is sinking. It's not easy to keep that mindset. But just remember, there's a greater purpose here, and your timeline extends far beyond just what's happening today or even this week or this month or even this year.
I like that. I like that you said this is the perfect time to be evaluating your portfolio and really taking stock and trade of what's in there. Because, I do feel a lot of investors, whether it's getting busy in life or they just remain, negligent, or they don't want to look what's the dust bunnies under the carpet, so to speak. But now is that time, because if your money's not working for you, then I don't know what you're doing. I mean, you're not investing, you're just losing money. And I sat with somebody for lunch the other day, and he had shared with me the fund that he has his son's accounts in. And he was like, oh man, these funds have a high dividend yield. And I said, yeah, that's great, but like, what's the total return? And he was like, what do you mean? And I'll say this guy's not someone who invests as we do, but I said you got to understand the total return, because so what if the dividend yield is 10%? Your kids, I mean, they're 16 and 14.
Yeah.
They got time to just sit. And if none of you are ever going to look at the market, I'm not so sure that you want to just be invested in a dividend paying fund. What are their goals? And so anyways, I said you might just want to look into the S&P 500, keep it clean, and it will just grow over time. It might just be easier for you in terms of ensuring a total return. And then I actually showed him through the chart, a comparison chart of the performance of the S&P to this other fund. And of course, the S&P blew it out of the water. So after looking at that, he was like, should I buy it now? Should I sell out now? And do you think the market's going to go down? It was kind of the same question. I said to him almost the same thing. I said, look, if you sell it now and the market goes down, okay, the market's going to go down because that's what's happening. But if you sell now, or don't sell now rather, and you miss the opportunity to ride the S&P back up, which I do think will ultimately perform better than the vast majority of the stocks we all have in our portfolio, depending on what they are, missed opportunity. Now, something I always do is compare performance. And I know it's, when you're looking at companies, say like a tech stock to like a J&J, yeah, the performance is going to be, unthinkable. But I think that's important to do, because it always is going to wrap back to your investor profile. You like, it's just, you have to keep going back to this. And I just had Sai Katara on from Tap Alpha on my Masters of the Market chat. Wonderful guy, very transparent. He plays options on the S&P 500. That's his single fund for his firm. Though they do have another one coming out soon, which is pretty exciting. Anyways, I bring him up because a conversation we got off camera was investing into the S&P or going individual stocks, depending on what those individual stocks were. And I think that's always interesting to look at, because if I'm going to invest in a company that is not a fund, obviously, I want it to at least outbeat the S&P 500, because the S&P is going to give me basically my average. And so now I've really started to take a look at, I'm under 10 holdings in my portfolio, but which one of these individual holdings is not up to par with the S&P 500? So, announcement, another one for everybody. I actually sold out of a position of mine, a top position of mine earlier this week. It remains, in my opinion, a company that I'd love to run, a company that I'd love to be a part of the team, a company that I actually know someone who works pretty high up in the company. That company is Lockheed Martin.
Oh.
And I never thought I would sell it, but let me tell you why. Kind of my rationale behind it. Lockheed Martin had a heck of a run over the last two years, year and a half. Now we've had the war with Russia and Ukraine. We've had Middle Eastern conflicts. Okay, and so Lockheed was arguably the biggest beneficiary of the global wars, and their book of business, being Uncle Sam and Uncle Sam supplying the world, was just booming. And so their revenue shot up, their stock price shoots up. But now, as we see it, these wars are winding down. And although Lockheed will continue to boom and benefit, because every government, in the world is going to do one thing only to protect their people, which is stock up on defense and continue to arm themselves up the wazoo with the most technologically advanced weapons. What's important to look at is the landscape of the world and what it may turn into over the next 4 years, so on and so forth. I don't see a turbulent world in the next 2 to 3, 4 years. I see a lot of things winding down. I think that's the investor sentiment. So therefore, we see Lockheed Martin stock coming down. Great company, excellent balance sheet, a company that will remain in business. So why did I sell it? Because when I start to look at the returns of Lockheed Martin to the S&P 500, it would be better off for me to invest in the S&P 500 or a different dividend growth stock like United Health. And that was my rationale behind the sell. And you know what? I got a little bit more comfortable selling, because I don't know if you recall from earlier conversations, I was reluctant to sell some of my positions that I was kind of emotionally attached to. But I had a good conversation with somebody else of a Masters of the Market chat that's coming up. Ryne, get this. I interviewed this guy. I'm not going to reveal his name or anything, but 28 years old, owns 2 businesses, millionaire, real estate investor, as well as dividend investor. I don't think you know. You may know him. I don't know if you know him.
I don't
But
know. It's not ringing any bells off the top of my head.
he is a wow factor of inspiration. Very, very, very humble guy. And absolutely love this guy. And I'm sitting here, I'm like, man, you got two businesses, real estate portfolio. You're 28. Like, how did you do that? So he's got a heck of a story. I'm really excited to get that Masters of the Market chat out this upcoming Monday. But what I learned from him, and this is why I love these Masters of the Market chats. Doesn't matter what type of investor you are, what you're investing into, whether it's real estate, whether it's freaking I don't know, gold, coins, I don't know, whatever. Every Pokemon cards, every investor has a certain mindset that we can learn from. Great mistake I think many of us make is saying, oh, he's that type of investor, can't learn from him. Wow, what a mistake. And I see that a lot on Masters of the Market. I get a great real estate investor on and people go, not a dividend investor. Are you crazy? Guy's a multimillionaire, or in some cases, I had a billion, like nuts. And people are saying, I can't learn from him, or not interesting, not a dividend investor. To me, it's heartbreaking. There's so much wisdom out there. I took away from this 28-year-old kid, you cannot get emotionally attached to your stocks. Investing means being objective on your investments, and when it is time to sell, you sell for better opportunity. And it sounds like Warren Buffett. He's as cold as ice, if you will, when it comes to making strategic moves. Willing to accept defeat, but tries, of course, to bet on the biggest, the baddest companies, to never sell. But when it's time to make a move, he'll make it. And he's cutthroat. So I took away from this conversation, like, don't get emotional. I love Lockheed Martin. It's a phenomenal company. And if I wanted to be laxed on my investments right now, I would sit with it. It's not it wasn't like I didn't make money from it. It wasn't like I wasn't making dividend income from it. The question comes back to, what's my goal? What am I doing? Could this money be better spent elsewhere or reallocated where I'm going to make a stronger ROI? Which, by the way, is what I also told my buddy who I sat with. He said, what did I invest in something bad? Is this a bad fund? I said, no, it's not a bad fund. You made money. That's fantastic. The question is, can you make more? Is there an opportunity for you to make more? And I get it. A lot of people out there might be like, whoa, it sounds too growth investor like. But the reality is, where are you putting that money? Maybe it is a dividend fund.
Well, when it comes to the guy's kids, he's investing for his kids, right? That was the kind of the backstory.
That was the lunch guy, yeah.
Let's say hypothetically, I think you said the fund had like a 9 or 10% yield. Well, if it's something like JEPI or JEPQ, it just, even as a dividend guy myself, or someone who appreciates, cash flow, I just don't see, it just doesn't seem to be a suitable investment for someone like a kid who, sure, they'll get that account passed over to them when they're 18 probably, but even then they won't use those investments. And so really, like, the biggest benefit you can give them is something that is going to, kind of like you were talking about, deliver the highest total returns. Just cash flow at that point shouldn't even be a consideration, I don't think. And it's like, yeah, for someone like that, you can't go wrong with just the S&P 500. Why wouldn't, I don't know. Like I said, even as a dividend investor myself, I just don't see the practicality of going with something high yield for like a toddler.
His strongest case was, but it pays dividends. And I was like, so what? Okay. I gave him the classic pizza analogy. It's all the same at the end of the day. What are you going to do with that capital? That's such an important question. And he's like, well, I'm reinvesting it. I'm like, okay, but again, so what? The question comes down to, like, Ryne, I'm just going to use you. The plan is to retire earlier and live off the dividends earlier. That makes sense then. You're going to load up and build this dividend portfolio now. For me, I have quite a different goal in mind. Yeah, I do want to retire earlier. And yes, I plan on making certain adjustments at a certain period of time when I see suitable to jump back into dividend paying stocks. But right now, at this particular moment, with a very, very audacious goal I have in mind, it simply doesn't permit me to invest in the Verizons of the world and be a laxed investor.
It's crazy, kind of on a similar note. AT&T has just been on fire. I don't know if we don't have to get into it, but we're on the subject of, the telecom stocks. AT&T is up something like, gosh, man, I think over 20 something % in the last, certainly the last year, maybe the last handful of months even. It's been on fire. I don't know what's been going on with that one. Still wouldn't touch it. Like, I still wouldn't have any. I'm glad I sold out of it, but it's wild to see what that share price has done.
It went from $21 per share back in January
to 27.
It's 21.
And now it's at 27 though.
And now over 27, and then, I mean, not that it's that much. It came back down to 26 with the rest of the market.
Dude, I sold out of AT&T at like $17 per share.
I think everybody lost money on AT&T, man.
Yeah, but I think I reinvested that into Vici properties, some into Visa. So I've done just fine with how I reinvested it. But anyway, kind of a quick sidebar there. But yeah, and with that said, like, actually, I don't know what I was going to say. let me take a step back. I was going to mention earlier, I'm kind of slightly changing subjects, but going back to what we were talking about a few moments ago, I thought your conversation with Sai was really good. And after our conversation last week, we were messaging and you said that he was going to be on. You thought that he would be a good guest to even have here on the deep end, which I'd be open to. And I've got to say, like, admittedly, going into, I'm just always skeptical. I'm skeptical of people who sell investment products, for better or for worse. I just feel like there's so much junk out there that when I hear there's someone with this, certain fund, it's like, it's just another it's just another round hill. It's just another yield max. I'm just kind of, and I shouldn't be, but I'm kind of jaded in that way. Usually I think that's a correct assumption. But in the case of Sai, no, I thought that was a really good conversation. He seemed like a really nice, down to earth guy. The difference with one of the main differences, two of them that I noticed with Sai, is that number one, he has all of his skin in the game that he's playing. That is in complete contrast to anyone over at Yield Max, anyone over at, I don't know that for sure, but I'm guessing. So don't quote me on that.
You'd be guessing just about correctly.
Okay, but so many people who push these investment products don't invest in them themselves, and I think that's a huge red flag. Sai, if I remember this correctly, he has 100% of his money in his own funds. So obviously he's incentivized to deliver strong performance. So I thought that was really cool. And also like his fund, which is, what is the ticker?
TSPY.
TSPY, TSPY.
Yes.
It hasn't been around for that long. It's only been around for, I think, 6 months or so. So we'll see how it shakes out over a longer period of time. But then this is also like where it contrasts to a lot of the funds that we're seeing come out these days. It's so simple. It's just 99% of the fund is just in the S&P 500, and then he writes covered calls, out of the money covered calls on the S&P, and I'm just like, yeah, that's simple and straightforward enough that I think I can get behind that. And that seemed more akin to something like a JEPI or JEPQ to me, closer to something like that, which I think those are fine funds. If you're going to go the covered call route, I think those are probably two of the better options. It seemed much more akin to something like that than it did some of these other funds that just frankly are garbage. So I really enjoyed the conversation. I thought he seemed like a really cool, down to earth guy and a guy with his head on straight too.
Ryne, he's actually because I'm coming to Vegas at the end of the month. He's going to be in Vegas. So for anybody out there that's listening that will be in Vegas at the end of the month, let us know. But Ryne and I will certainly be meeting up when I'm in Vegas. And so, Ryne, if you want me to pull Sai in, he's just a phenomenal guy. The reason why I love Sai so much, to your point here, is it's twofold. One, when I first met Sai, I understood that he was never a finance guy, and he's still not necessarily a finance guy. He's an engineer by trade. The investment strategy that he uses for TSPY is actually an investment strategy, which I think this is so epic, that him and his dad created. Him and his dad created that investment strategy, and he was like, wow. By the way, he even says himself, if you're looking for crazy returns, TSPY is not going to deliver that for you. It's going to give you the S&P returns plus income. That's what that fund is meant to do. It's going to give you income and return just as much basically as the S&P, with your income and the appreciation. I just think for someone to outright say that and then double down on the fact that his skin in the game is with his own fund because it's his father and his strategy. I mean, I think that's amazing. And I haven't met anybody yet in the industry that is similar to Sai in that he is so transparent and all in on his own fund. I just haven't met someone like that. Everybody I've typically spoken to in the industry, and I've spoken to a lot of folks, not just on Masters of the Market, it's part of my job to network with a lot of these Wall Street guys. There's no skin in the game.
Yeah, that's a huge problem.
It's huge. And I wow, this is a great topic to talk about, but there's not a lot of skin in the game for these individuals on Wall Street selling us their garbage. I'm not even going to beat around the bush. And so you really, and Sai loves to talk about this, you really have to understand NAV erosion. You got to understand what you're investing into. Sai said it time and time again. Don't look at the attractive, appealing, sexy dividend yield. That is not what is going to get you the ROI. It's going to be the total return. You need to understand that number inside and out, because just like the gentleman I had lunch with, he goes, oh, but it pays a dividend. And I'm like, so what? Like, yeah, even my dog is like, so what, right? Um, it's so important to understand the total return, because those dividends, the yield max one specifically, there's so many investors that fall trap to it. And who cares when over time you're depreciating? So what? You're bringing home your own money, and these guys are collecting the fees and getting paid, and you're losing money. That's Wall Street. I mean, if you really have to sum up Wall Street, so you got to be careful with what you're investing into.
Absolutely. I'm looking up the total returns on it right now. And like I said, it's only been around for like 6 months, but so far excuse me, its returns are pretty much equal to the S&P 500 in the few months that it's been around. So it'll be interesting to see how it shakes up over time.
He doesn't shy away from saying, like, he goes, it's going to give you the S&P. It's the income. That's what you're getting, the S&P returns just with income. If you need income. And I even asked him, do you think this would be a good fund then for somebody who's younger? And first of all, yes, he says yes. But then he also goes into saying that it's not like you don't only have to stick with TSPY. Like, you can have other positions. He personally is all in on TSPY. That's where all his money is. I just think that's so remarkable for someone on Wall Street to just actually be all in on their own fund.
Yeah.
Now,
one thing that's go ahead. I'm sorry, man. I didn't mean to cut you off.
Go ahead.
My bad. I was going to say, sticking to the returns for a sec. One thing that's interesting to me as I'm looking at this chart is that it looks like when the S&P is going up, it looks like TSPY seems to go up a little bit more, and when the S&P goes down, TSPY seems to go down at a similar rate. There's a couple instances where it sees a bigger drop, but for the most part, it looks like the downside is about equal to what the S&P is seeing so far. Just looking at the chart there, which is interesting.
Yeah,
interesting to look at this stuff.
It literally just tracks the S&P, and that's why I say, like, for me personally, and Sai would probably disagree with me, but for me personally, I'd rather just continue to have my money, like, forgo that income right now. Again, 30 years old, you got to keep that investor profile in mind. 30 years old and your goal. I don't necessarily need that income right now, and so I'm okay. I'm okay forgoing the income and just continuing to load up on where I need to load up on. And I think that's a question everybody needs to ask themselves. Why is it that you need your income right now? What's your plan? And we've spoken about this multiple times before, but that's so important, because it doesn't mean you can't be a dividend investor. It just means that maybe you want to orient yourself towards the lower dividend yielding stocks to be a dividend growth investor over time. So hopefully maybe the John Deeres of the world, the United Healths of the world, the Walmarts of the world, Waste Management. So all these lower yielding dividend stocks over time, as they're growing their dividend yields out, are going to actually give you more in return over time.
Yeah, absolutely, man. Like I said, I'll be interested to see where this the returns on this fund settle over a longer period of time. But so far, it looks like they're off to a good start. And I'm still not a covered call ETF guy myself. But if I was, then I'd probably consider this one, and I'd lump it into a similar category as JEPI and JEPQ, which I think is a good thing. Those funds have actually done, if we're talking total returns, those funds have actually, especially JEPQ, have done pretty well. So yeah, it'll be interesting to see where it goes.
Correct me if I'm wrong. I think it was because TSPY is a young fund. It's 6 months old. I think it was Warren Buffett, and if Ryne, you don't know, someone out there has to know, so correct me in the comments. But I think it was Warren Buffett who shared that he wouldn't invest into a stock unless he was able to get his hands on the stock's history. So it had to have a strong history, and I think he said he uses about a year plus as a history. Like, you know what it was? He wouldn't invest the day of the IPO or the fund. Well, I don't think he has any funds, but he basically said like, don't invest on the day that the fund rolls out or an IPO day, something like that. And I agree. I think there's TSPY or any of these opportunities are great opportunities, but when the fund is young or the company is young, it's kind of like a yellow light for me.
Yeah.
And until I have that history to actually see how it performs in the markets, in the arena of the market, that's key. And I'll also say that I'm curious to get your opinion on this. JEPI and JEPQ are great funds, I think. If I were to go in that direction, which one do you think you would invest into, you would focus on? Would it be JEPI or JEPQ?
That's a good question, man. I actually used to own Jeppy for a period of time, and it did well for me. I made a little money on it, had some nice monthly income. Um, I I don't know. JepQ so far has delivered higher total returns than Jeppy, and it seems to be the outperformer. So I guess just based on that, I'd lean towards JepQ these days. But I don't know. Like I don't really spend enough time looking deeply into covered called ETFs that I can have a serious and informed opinion about it, if that makes sense. But I
Yeah,
will
for
say,
sure.
just real quick, I will say the fact that these type of funds and like a T-SPY gives you a yellow light is a good sign, because I think it's more often than not new funds and new investment products will come out and it's an immediate like hard stop. It's an immediate red light. So I think the fact that it's yellow is actually a good thing.
Yeah, I mean, look, again, you're speaking to someone who works in the industry, who networks with all of these individuals, and at the end of the day, everybody's got a job to do. Put it like that. Now, Wall Street has a job to sell retail investors. Um, I and Ryne and other creators who are out there are here on YouTube doing this free of charge, making videos free of charge. Of course, yeah, you get money through monetization and all those other things, but bare bones, it's free of charge for the retail investor. So I'm not here to sell anybody anything. I'm just giving my opinion. Even having Cy on, Cy can say whatever he wants, or any of these guys can say whatever they want on my channel. It's not me. I'm not making the remarks. But I will say this: the more you listen into the Masters of the Market chats to the industry professionals, the more you will learn about their job, what they're doing. And you might be pleasantly surprised that what they say and how their funds are performing and kind of the products that they're rolling out are a direct result of the things that you yourself are interested in or want, because their job is sales. It's not asset management. Their job is sales. And you got to realize that. Now, a guy like Cy, why I really love Cy, he wasn't a finance guy. He's still not a finance guy. As in, yeah, his career in finance is 6 months old. And the only reason he has the career in finance at this point is because he created his own firm, left engineering. And so I'm using Cy as an example. Like, this guy has this strategy that he had from him and his dad investing and just made it into a firm single fund. I think that's something to be noted versus some of these other firms, that have like 40, 50, 60 funds. And over time, you see them reverse course and just try to sell you on the trend of the moment. So I think you got to be very careful, because again, it just wraps back to sales. And I used to be in sales, and to some extent now I still am in business development and sales, but a salesman is there to sell, and you got to be
um,
careful.
yeah, no, I think it'd be interesting to meet him in Vegas. Maybe I know we're planning on meeting up, which we don't have any set plan for that yet. I figure we'll dial that in as it gets closer, but it would be cool to chat with him. I feel like it'd be an interesting conversation.
He's such
Um,
a great. He's like, not to. I'm just like really giving Cy a lot of spotlight. He's just such a great guy, man. Like he really is a genuine guy. Like, not someone who would jump on here and like just talk about Tap Alpha. Like, he's just funny. He's a funny guy. Um, like I said, he's not a finance guy, so he speaks his heart out, and that's what I appreciate about him. Now, he is, of course, really excited about his fund and things that are going on, rightfully so. But he comes with a lot of experience. And what's interesting, something that he said to me, because I asked him, I said, now that you have some experience under your belt in the financial industry. What's something that you learned? And I thought his answer was pretty interesting. He goes, well, because I'm not a finance guy, and I'm only 6 months really in the industry, I've learned so much. There we go. The star of the show.
Yeah.
I've learned so much about, funds and investing and just like the retail investor. But he goes, I look at everything so differently because I'm not here in the financial industry to be a finance guy. And I just thought that was a great answer. He's got a different hat on. And with that perspective, you bring different things to the table. As Ryne's a cat guy, so he brings a cat to the table.
He's been doing this weird thing lately where he'll like chew on my keyboard. So he's like trying to get to my keyboard right now, and he'll start like chewing on the keys. It's the weirdest thing, and he started doing it out of nowhere. But yeah, I thought that was really he brings an interesting perspective, and we're totally like this is like the SPY hour
I'm gonna
today.
tell him after this.
But it was interesting what he said about everything operating via email. Like it seems like such a wonky process to initiate a trade in your fund. And I thought it was cool that he basically developed his own platform to optimize that. And I mean, if things don't ever work out with Tap Alpha, I'm sure that's something that he could probably turn into something pretty lucrative. That platform right there, that was interesting. But no, dude, I was going to ask you, just going back to Vegas, what first and foremost, what is this conference or this convention that you're going to? What even is it, and what happens there? Number one, and number two, I know you'll meet up with SPY. Are there any other people that you're interested, people or companies that you're interested in seeing or meeting or talking to, or I think you know what I'm asking, but those are a couple questions I had in mind about your upcoming trip.
So the conference is an ETF conference. So all the bigwigs of this world will be there, essentially talking about kind of the future of ETFs, the direction that we're heading in, and what trends, are currently kind of booming, and which ones have been dying. And it's a massive networking event for all of us industry folks to be there, to meet and greet. And so, what no one sees is again, I always love to show, like, kind of think about what people see versus what's happening behind the scenes. All of us are, in this industry, friends, and talking and chatting. And although what you might see, I think sometimes on television, we always see, the banter and this and that, and behind closed doors, like everybody's friends, everybody's talking. I can't wait to meet SPY and have a drink with SPY and talk. And I even said maybe we'll do a couple shorts videos together and just throw them out to people. But I think in terms of other folks to meet, there's some people on my list that I definitely am looking forward to meeting. There's some, I don't want to name any names, but there's some people that are there that I think are going to be worth meeting. I'll put it that way. And I got a lot of questions for a lot of these folks, and hopefully I'll even be able to pull some of them for Masters of the Market too, so I can introduce all of them to everybody else out there. But really, it's just about ETFs, the trends, moving forward, directions, strategies. And this is, I think, an interesting one, strategies on how to roll out ETFs more successfully. Because this whole game is a game of listening. It's what I was saying before. This industry is all about listening to what everybody wants. Everybody wants income today. What are we getting more and more of? Income-driven ETFs. What's scary about that is you really have to understand your numbers, because not all of these funds are equal. And that's a key takeaway. Now, I know that going in, part of the reason, my company is sending me there is, as it was shared with me, you're a genuine guy. This industry needs more genuine people. So we want to send you, and I'm honored. But I do think Wall Street needs more genuine people. And I do think that I'm in such a great position to network with a lot of these individuals and to share even what I'm sharing right now with the masses. Be careful. Be careful. I know I know what's out there in the industry, and it's just like not everybody is there for you. And it's sad. It's really sad. But that means that you yourself are always going to be your best wealth manager. Don't trust other people with your money. Don't be sold on things. It's up to you. And that's, I think, the biggest takeaway from someone who's working, with a lot of these Wall Street guys. Just be careful.
How does it work? Like, if you wanted to roll out a new ETF, does the SEC have to approve it before you
Oh,
can
yeah.
really?
It is
It's
such
interesting to
a
me, like, go ahead, I'm sorry.
it is such like compliance is everywhere. And all that's amazing. It should be. Just saying it's a long process to roll out ETFs and to roll out anything. But eventually when they do get rolled out, it doesn't mean just because, the SEC and any of these agencies, regulatory agencies, even though they have their eyes on funds, it doesn't mean that they're safe to invest in. I think we have to think about that. And I won't, there's a lot of garbage on the street. Wall Street needs to be cleaned up.
Are there any, off the top of your head, can you think of any things that would make the SEC turn down a fund?
Not necessarily turned down. Their eyes are more on how we report. So are we reporting the truth? And I think that, again, even companies, by the way, will do this. You got to look at Enron. It's a classic example. But you got to, and you got to also understand, I think this is always interesting to look at. Everybody gets excited for earnings season. But what do you think's happening a month before earnings season comes out? You got the best and the brightest coming in and doing anything and everything that they can to make that balance sheet look squeaky clean. Everything's got to be cleaned up, because it's earnings season. And whose eyes are going to be on the company? All of ours. And what do they want? What do they need? Our money. And so you just have to be careful. And so, the SEC and the regulatory agencies are going to be doing everything they can to make sure that these companies are reporting honestly and transparently. But that's, unfortunately, something that you can't necessarily control 100% of the time. And some companies slip through the cracks. Now, there's also the other angle of this. It's completely fair if you're using terminology that the everyday investor doesn't really understand. So let's just say you're reading through, a fund overview page. I mean, you ever really look at the fund overview pages and read the language?
I did. I actually usually do. If I'm investing in a fund like I went through the SPY or TSPY fact sheet and prospectus. I went through those. Yeah.
It's always dressed up.
Yeah. Well, same thing if you go to the YieldMax website, they'll show the distribution rate and then the SEC yield. And then there's the fine print at the bottom that explains the difference between the two and how they get to the distribution rate and how safe it actually is. So yeah, there's more to it than just that.
That's the scary part, because the everyday retail investor will really just look at the big numbers, and not only the big numbers, who cares to read anything anymore?
Yeah, so I guess then with the SEC, what they want to see is that information is out there, and then whether or not it's actually read and taken into consideration is up to the individual investor, which makes sense.
Yeah.
Like that's how it should be. At the end of the day, it just always goes back to like, this is your portfolio. It's your responsibility to do your own research and make your own decisions based on your own research.
We can post things, like let's just say we're using social media and posting things on certain ETFs or whatever it is. What's important, otherwise we'll get hit. You just need to basically say, go read our website, for more. And then what's the game once you get to the website? How well can you hide the information but still have it on the fund, prospectus or the overview page? It's there, but can you find it? So
Yeah.
let's just show you the best. And that's really, I mean, you just, it's, I don't, you have to be careful. That's all I can say over and over and over again. And I think that's where it really becomes noteworthy when I have, people from Wall Street on Masters of the Market. Is like, listen to everything they say. When I ask them a question on what you're investing into versus, what their fund sells, that's an important question. He's back for more.
Peanut, come on, buddy.
But that's an important question to understand. When I ask someone, former hedge fund managers, where they're investing their money, and they're like, yeah, we're locked in on like only 5 to 7 stocks. And then you look at your own portfolio and it's like 70 stocks, 100 stocks. I just got to question myself. It has changed me. Of course, reading has too, but I think more than anything is just talking to a lot of the investors who've quote unquote made it. What are they doing? How is their strategy different than mine? How do they adjust their risk tolerance level? Because in order to be successful in this game, which, by the way, this 28-year-old guy that I just had on, I mean, I don't want to say balls of steel, but balls of steel with what he did,
I really want to know who this is. Will you tell me off camera?
Off camera.
Okay.
For everybody else, It's coming up Monday. It's an exciting one.
All right. It sounds exciting. Has this person been a guest on Masters before? No?
Nope.
Okay. Then it's not
New
who I'm
face.
thinking of. Okay.
And just, I got nothing but great things to say about him. He's just a great soul.
Okay. Okay, dude. So marathon. Let's get back to the marathon. So first and foremost, I'm really glad that you're doing a half marathon and not a full marathon, because it would just, you might not be able to like walk for a week or so if you did a full marathon with only a few weeks of training. So I'm really glad that you're starting with the half. I think that's much less crazy and much more doable than doing the full. And I actually think you could really get some good training done in a 4-week span. But I got to know, with that said, do you have like a plan in place, like a training plan in place leading up to the event?
Yeah, so I'm going to start with like saying it's not like I'm coming from sitting on like as a couch potato to now running a half marathon. I think that's important to understand. But I do. I'm putting together a training plan.
Okay.
And I've actually got in touch with a good friend of mine who he's been running marathons for years now. And I was like, man, just give me the plan, Now, based on what I can handle, I mean, tomorrow I think I'm going to wake up at 5 a.m. and go run a 3-miler. And we're going to go. We're going to move. And like I said, what I really love this training for is because it's just going to totally take my mind off of a lot of things and put my focus on something that's just going to make me a better individual. Because I think there's something to learn in running a marathon, and I think that it's applicable to all areas of life. So I'm really excited about that. But I do have a plan, and tomorrow's the day one, man. Day one. I got 30 days ahead of me to make some magic happen.
Nice, man. Well, I'm
really
excited for you.
By the way, you're going to see me in Vegas at the tail end of this, because once I get, once I'm back home, is when the marathon a couple days after. So I hope I'm not like jet lagged or like whatever. I'm going to be in all sorts of weird funks, I feel like, for this marathon.
So I'll see you after the marathon or before? Before. Okay. Cool. Well, hey man, if you want to get a run in while you're here, we could definitely do that. That'd be fun.
It will be interesting, actually. We should definitely do that. And on top of that, I think this ETF conference has in the morning yoga. So maybe we can hit a yoga session and do a run or something like that.
Yeah, you're staying at the Virgin, right?
Yeah.
Okay. They've got I don't know if they'll do it here, but they've got a really nice like outdoor area that I could totally see them doing yoga there. Virgin's really nice.
I'm like laughing because I'm like, you just picture all these Wall Street guys trying to numb out and chill out doing yoga.
I know.
We'll
it's
see
gonna be
who's
interesting.
there.
They've got their like ties on, and yeah, it'll be really interesting, man. But yeah, you could do. So the Virgin's right down the street from the Strip. So a good run. It's maybe like 1.5 miles, I think. You could just run down to the Strip and turn around, and it's a straight shot. That'd be a good run. I mean, you can obviously go farther than that too, but yeah, maybe we'll try and do that, and then maybe we'll do coffee or something at least.
That would be
We'll figure
amazing.
it out. We'll figure it out, man. But yeah, I'm excited, dude. Do you have a goal time or pace
I
or
got
anything
I
that
got
you're trying to
nothing.
hit? Okay,
I got nothing yet.
good.
I like this was a day, because it was after a month or so. I'm watching your stuff, okay, and then I had a buddy message me, and I had the thoughts in my head already. I was like, I want to run marathon, just a matter of when, and like if there's anything near me, maybe I'll fly somewhere for a marathon. I don't know. And then you ran yours, and then everybody in the comments, and then someone texted me today, and with a picture, there was a big sign up for the marathon, whatever. And he goes, should we sign up? And I'm like, that's it. This is the third time, someone's directly reaching out to me. I'm like, I'm in. And, I bought some smoothie, fruit shakes and stuff for myself. And, man, I'm just going to charge up. I'm just going to go. I'm going to like David Goggins it. And I'm pretty crazy like that. When I have an idea, it's just going to happen. When I want to build something, a podcast, I'm all in, it's lock in and make it happen. And there's no plan B.
Yeah. Well, man, I think you'll be just fine. 4 weeks, if you're doing like one long run per week, I don't know if the 3 miles you're doing tomorrow you'd consider a long run or not, but I mean, if you can get to a point where where you can at least hit 6, 7, 8 miles, like you can do that stretch of distance, then you can push another 5 miles. I think, personally
It's all
speaking,
mindset, right?
it is, but it's a lot of it is mindset. Um, One thing that having more time to train, one benefit that does come with having more time to train is the fact that your joints can get more acclimated, your bones can get more acclimated because you take a beating like running on the pavement, and so you need some reps in to which in this takes time, but you need some reps in to like get your feet used to that pounding, your knees, your ankles, all of it has to kind of acclimate to this new stimulus that you've just introduced, and it's not always the easiest on your body, but so that is one area where having more time to acclimate can really be a big benefit, at least in my experience. But even that, like if you feel those things while you're going, you're going to feel them whether you're training or whether you're doing it in the race. So it is just at that point kind of a mental thing to persevere. And there's I don't want to say good pain and bad pain, but there's when it comes to running and feeling those kind of joint things, there's annoying pain, but there's also another kind of pain where something isn't right, and if I keep doing this I'm really going to get hurt. You don't If you feel that pain, it's not worth it. But if it's just like an annoying, my ankles kind of hurt or my knees kind of hurt, then you can push through that. And like I said, 4 weeks you'll be able to get some good training in for sure.
Well, look, I pair this with the market, right? Like the pain of the market on the decline. I'll be able
Yeah.
to get through it. I'll see through it to the other end. I'm going to keep investing. Keep
Yeah,
going.
just one
Keep going.
step at a time. One step at a time in both cases.
Yeah. I mean, look, I really want to thank you, Ryne, for posting your stories of inspiration every day in my face, running. I'm like, what am I doing with my life? I make it sound like I'm doing nothing, but that's another interesting thing is actually my bigger concern is like just still managing everything else, because now it's adding in the time to run and running. I do a workout every morning, a HIIT workout for like 15-20 minutes. That's 15-20 minutes. But now running it just takes time to run. So I'm like, all right, I'll wake up earlier and then I'll come back and then I'll walk the dog because I got to still do that. I'm like trying to manage when I'm going to run, how much time, and I think that will actually be even a greater push for me because I know I'm going to have to get back and do certain things. So it's just like focus and move, Don't think, just focus, move, act.
Well, this is going to be great for Nala. She's gonna enjoy this new hobby of yours, man.
Oh
It'd be
yeah,
good for her
yeah.
to get some wiggles out too.
When I run with her, she likes to gnaw on the leash a little bit. I have to tell her to
Oh,
let go of the leash, and then she does let go. She listens, but she likes to play too. Like so she'll run maybe like for 5 minutes and then go back to the leash. And I'm like enough.
well,
Knock it off.
it already sounds like she's a better running companion than Peanut has been for me.
Yeah.
So,
Let's
No,
hope
man,
so, man.
I'm proud of you though. This is going to be cool. You're gonna, it's going to be hard. Like you said, it's hard to fit it into your schedule. It'll definitely be a test. One that I know that you will pass with flying colors. It's going to be great. And I'm interested to see too, after these 4 weeks and after the race, how you feel about running afterwards. If it's something that's like ingrained in your habit now, or if it's something that you kind of just do once and say, just move on and say you've done it. But I think
I've,
just
I've I've already committed in my head right now. I'm like, you know what? If I did a half marathon this year and it works out well, there's no reason why I couldn't already start training for the full marathon for next year.
yeah, that's a good point. I've
And
been
that's
getting.
my mentality. Like
Mhm.
I'm a.
Well, you're certainly more gung ho about it than I am because I got asked, or I've been asked a few times, like, okay, well, now are you going to do a full marathon now that you've done the half? And I'm like, I feel like at some point that's the natural progression with this. You have to make that commitment to go the full distance. But I'm just not quite ready to do that. I had a lot of fun with this half marathon. I didn't feel completely dead after it. And at the end of the day, like, in addition to just burning calories and health and whatnot, I want this to be fun. I don't want it to, if it's too strenuous, and if it's too much of a time commitment, I just don't see it being fun for me anymore. So I'm like, at some point I probably will have to step up and do the full, but for now I'm going to stick around to this distance, improve on my pace and my times in these half marathons and shorter. And then at some point I'll be ready to tackle that challenge. But going back to just being acclimated, I still feel like, and I've been, I guess, running now for 3 months, maybe 4 months at this point, and I still feel like I need to acclimate my body to these distances. I still get some pretty bad blisters on my feet, even though I do this multiple times a week. And that's just another way you have to acclimate. But it's like, I think there's still more room to improve doing what I'm already doing before I take the leap onto the next thing. And I guess taking the leap onto the next thing would help this current distance, but I'm having fun with this. So I don't want to push it too far just yet, if that makes sense.
Yeah, I'm thinking about your investment strategy. I mean, it's funny. I go back to this. It makes sense for how you're investing, right? You want to have the fun, and then you look at my strategy, and right now I'm like, let's go. Let's just go.
Let's dump another 8 grand in. Let's dump
Yeah.
18 grand in. Yeah.
For
It's
me,
interesting. It's interesting how much of, I don't know which one comes first, but it's interesting how much symmetry there is between investing and running, and how your mindset for one can relate to your mindset with the other is really interesting.
look, my mind goes feed the fire, feed the beast, right? Like, and just go, 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 build, 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 and that's how I live my day to day. There's so much. I mean, it's crazy how much I'm doing every day. And every time I kind of share with someone my schedule, they're like, "Wow, how do you do that?" What are you running on? Like, not physically
Yeah.
running, but like, what are you fueled on? I don't know. I'm just going. I'm like
It's so
just
funny.
enjoying.
It's so funny because I feel like we're so similar in our mindsets and a lot of things, but that is one way that we differ. You are a busy bee. You need a full plate all the time, whereas I'm trying to like simplify things as much as I can. I want to have time during my day to where I don't have to do things if I don't want to. I still do. I still usually have full days, but like I don't like jamming my day, just packing it to the brim with things and staying, not feeling like I have any downtime, because I don't know, I just don't operate that well. I'm like, if I get, and I've got a to-do list that I try and check off every single day. Some of them are daily things like reading and maybe like writing a book note. Some of them are things that I maybe do on certain days, like scripting a video or shooting a video or editing. But my thing is like, I've got this list of maybe 3, 4, 5 things that I need to get done today. Sometimes it's more, sometimes it's less, but I've got this list of X things I need to do today, and as long as I get those things done, then I'm happy. And
See,
then the rest, like, can
got
come
that
tomorrow.
done, that done, that done. Could I have done more? And
Yeah.
but the thing is, there's not like there's a key here for this. Is everything I'm doing is what I want to be doing and what I love doing. And there's nothing
Mm-hmm.
there that I'm like, oh, I got to do this thing. It's on my to-do list. I'm like, I get to do this thing. It's
Yeah.
amazing I get to do this. And so I think that's such a key, because if at all you are feeling I got to do this, like you might want to reevaluate maybe why you're doing that thing.
100%.
But I think a large part of it, just kind of defining even fun. I was a firefighter in my early 20s. And after being a firefighter and being in for any firefighters out there, like phase 5 fires, big, engulfing flames, you start thrill seeking. Like once you're kind of in an environment where you're cooking and like it's life and death, there's nothing really like what jazzes me up for fun. And my ex-girlfriend said this to me. She's so spot on with it. She was like, you love when life challenges the like heck out of you. Like life isn't fun for me if I'm not being squeezed to death in terms of a challenge. And for me, the fun of it, I mean, this sounds a little sadistic as I say it, but like the fun of it is, can I survive it? Can I overcome the challenge? And so I just think it's like, I love it, man. I love, even if I fall, it's the man in the arena for anybody who's heard that quote. You have to be the man in the arena. And so even if I die doing something, at least I'll have died doing something versus sitting on the couch as like a couch potato, and I always think about this as like, first of all, I don't want anybody showing up to my funeral being like, man, that Ari Gutman guy played it so safe his whole life. Like, I don't want that. I want people saying, I can't believe that this guy did this, he did that. Like, he lived life to the fullest, so much so that and I may have mentioned this weeks ago here, I think about everybody who says, I want to live life to the fullest, but they sleep in until like 10 a.m. I'm like, what?
Let me ask you this, man, because maybe this is where the root of the difference is. When you think about time, do you feel like you have a lot of time? And this could be gray area, but when you think about the time that you have, do you feel like you have a lot of time, or do you feel like you don't have enough time?
This is such a great question, and I might bring it. It's the deep end, so let's just go in, dive under. Man, I don't care who you are. If you're Ryne Williams or Warren Buffett, we all literally only have today. Yesterday is gone, never coming back. So it's a total waste of time to sit and reflect all day long about yesterday and all of our yesterdays. Tomorrow, I think about this all the time. I don't set an alarm clock. I wake up. I just do. For everybody that's out there that's about to set your alarm clock, what makes you so sure that you're going to wake up tomorrow morning? I think about that all the time. And I'm not scared of death, or I'm scared of not living. And so with this mindset, yeah, of course I got to do a lot in my day. I want to do a lot in my day. I always say to myself, what if this is my last day? Then who cares about, X, Y, or Z? And one of the things I love doing is the personal coaching, because that's something for me. It's just magical to sit with someone and really help them out with life and goals and accomplishments, and and it could be so minuscule, like going to ask that girl out that you find cute or attractive at the coffee shop, that whatever it is. Or on the other end, the job opportunity that seems lofty and out of reach, but that's all you have to do is network. Like there's ways to approach life. So I love personal coaching because it allows for me to actually watch miracles happen. I watch people transform. It's the coolest thing in the world. But a lot of that stems to the mindset of, why do you think you have so much time here?
Yeah, and see, I thought this would be the case. I'm on the other end of the spectrum. I look at life and I think, I'm 31 years old. I've got so much time. And time at the same time, I realize time is limited, so I'm not necessarily going to waste it. But I also don't feel the pressure to go, 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 go all the time. Like if, and to your point, like we don't know if we're going to wake up tomorrow or not. We just don't know that. But at the same time, I think, if that's true, if for some reason this is like my last day on earth and I don't wake up tomorrow, I'll be happy having passed away knowing the last thing that I did was like
was
watch
the
a
deep
good
end, baby.
was yeah no
Yeah.
no I was gonna say like thinking I always end my day as my wife and I will watch TV, we'll hang out in bed or whatever, and if I don't wake up tomorrow, I'll die happy knowing that the one of the last things I ever did was just like spend some good quality time with her at the end of the day. And that's an example of just part of my downtime. But even that aside, I will still die happy knowing that, look, every single day I lived, maybe not, I don't want to say to the fullest, because yeah, I could get more things done throughout the day for sure, totally could. There's a couple times a week where I'll maybe take a 20-minute nap, and that's something that I look forward to. That's a part of that's one of the things that I really enjoy about being able to control my own time and have this independence, is being able to squeeze those things in my day if I want to. And so with that said, if I die tomorrow, I'll die knowing that, look, I spent every day doing the things that I wanted to do with the people that I wanted to do them with. I made very consistent progress in all of the things that I have in my life, whether it's, running or investing or building a YouTube channel or whatever. There was continuous improvement the entire time along the way. And I know that if I could have kept going, I could have sustained that for the rest of my life. And when I think about my life as a whole, that's the balance that I'm trying to shoot for. Getting things done, continuing to make progress at a rate that is steady, but I also don't have to kill myself to get, you know what I'm saying? And so I guess what I'm saying is I'm more so on the other side of the spectrum, where I think I just have so much time. If my next video is supposed to go out Saturday or Sunday, I'm going to script it today. And if I've got time, like where I could maybe film my video, but it's like, yeah, I could also read or like have some downtime, I'll probably take the downtime, because it's like, I'll be able to wake up tomorrow and edit the video over a nice cup of coffee, and I'll really enjoy that experience versus like feeling the squeeze and the pressure to do it tonight, even though I can. It's okay if I push some things off until tomorrow. And so I try and find that balance of knowing that, look, time is limited, so you can't just sit around and waste your life. You have to take action. You have to get going. But there's also a balance that you need to strike too. You do have a long time to get things done. So make sure you're doing the things that you need to do, but also don't, at least for, me speaking to myself, you don't need to also like wake up, grind all day, every single day. You can have some downtime and you can have some balance in your life. And I think for me, like that's the only way to live, is with balance. And tying it back to the portfolio, it's the same thing too. Same exact thing. I always talk about how I try and build this well-balanced, all-weather portfolio, something that I can sustain over a long period of time. And that's how I approach my running. That's how I approach this marathon, and that's how I approach life as a whole.
You got 30
you know what
days.
I'm saying? Yeah. You got 30 days to live, man. So you better get it all in. No sleeping.
God willing, I wake up tomorrow.
But you know what I'm saying? Like, does that make sense? And I don't think that there's a right or a wrong way either way. Obviously, everyone, you do the things that work best for you. Just based on my temperament and personality, I feel like I need a slower pace.
I think what's interesting that is worth noting, because I don't want everybody to think like 7 days a week I'm on like I am now. Ryne, you know this, that on Friday night to Saturday night, I'm actually, I observe Shabbat. I'm totally no electronics, nothing. And so it's maximum in the moment rest. Like that's the rejuvenation day. And I think what's interesting there is a study that was done at, I think, Harvard, and they took the top students and they basically looked at their testing scores, and they found that the Jewish students who observed Shabbat, so Friday night to Saturday night, outperformed the students who studied the same time that these other Jewish students were just observing Shabbat and totally disconnected. So what I think is really actually interesting about what I'm sharing now is I feel like I don't want to say the word lose as in lose the day, because I love that day. I love when Friday night and Saturday come in and I shut down. But I'll share this. It's a loss in the sense of I know that I will have one day less to work than all of you.
Do you feel antsy during those days?
The days like before the shutdown?
Like well, no, like the days of Shabbat where you're not working, you're not on your phone.
No, man,
You
I'm
don't?
like locked into the moment. I love it so
Okay.
much. I wish I could never leave it. Like I'm so in it. And like all of this energy goes into like Shabbat, and like being locked in to the
Okay.
moment. And so I think that's just another key. And I had this conversation with someone at the dog park, actually.
And that's
Man, I
another
don't know
part
more.
of that's another thing that you do too that I guess could be considered, I don't want to say downtime, but it's away from the grind. You go to the dog park
No,
every
no, no.
day
I
and
go
you
to the
spend.
dog park. I'm either training with Nala,
Oh,
like
okay.
intense, or I have a book.
Oh, okay.
I'm
Well,
always
books, reading's
nothing.
downtime too. It could
True,
be
true.
considered work, but
It's
it's
not
kind
like
of leisure.
mindless.
It's leisurely, yeah.
Yeah. But there was a woman at the dog park. I was just talking to her yesterday. We were talking about REM sleep. And I think this might be interesting for everybody. We have subconscious thought, and then we have conscious thought. That's the obvious. Okay. So, and for anyone that's not obvious to, welcome to, the world. But what's important is that you clean your subconscious thought. That's what I do a lot of one-on-one work with people. Your subconscious thought is full of so much garbage that it prevents you from sleeping. Your subconscious thought is full of so much garbage that it actually prevents you from utilizing max energy throughout your day. And how do I know that? Through pure experience. I never knew that my subconscious thought was littered with garbage until I started a lot of this cleaning work. And what happened was I literally one morning woke up and like heard silence. It's a weird thing to describe. And I felt so rested. And now for the last 7 years, I felt like that. And I think that's also pretty crazy because what I get in 5 hours, 6 hours of sleep, someone else might get in like 8 or 9. Now, that person's sleeping 8 or 9 hours and I'm waking up and I'm living my day. I mean, again, it's all a game of numbers, right? You always hear all these CEOs talk about if you wake up at 5 and if you're reading and then somebody else is waking up at 10, you've earned X amount of more hours than they have and now you're working. That's how it works. That's how the real
Yeah,
world works when you
I
want to be
agree
a
with that.
leader.
hmm
And
I mean,
so,
even just waking up 1 hour early every day for a week, that's an extra 7 hours during your week,
which
and
is crazy.
it's crazy. And the counter argument against that is like, well, we stay up later. If we get up later, it's because we stay up later, so it all evens out. It's just on a
But the
different
question is,
time
what are you
frame.
doing before you go to sleep? And is
That's
that
certainly a good
energy level
question.
at peak?
But the reason that like waking up early, I'm typically up between, like, I think I got up right at about 6 today, and same thing as you, like no alarm. Periods of time, most of the year, I'd say I get up sometime between 5 and 5:30. Same thing, just kind of naturally at this point. And the reason that that period of time, or even earlier, so there's some 3 a.m., there's some 4 a.m. people. I've gone through periods where that was my time to get up too. The nice thing about that period of time, and maybe night owls feel this way about their preferred period of time, but the thing about the early mornings is like it's tranquil. There's no one up. There's no one up. There's no one reaching out to you. It is your time to focus on whatever it is you want during that time. And like for me, that's my favorite part of the day is like waking up, pouring a cup of coffee, and just reading during that time, because I know whatever else is going to happen today, like it can wait. People are sleeping. There's no urgency yet. So just take this time and get this part of the day done.
Yeah, no, I couldn't agree more. I look, it goes hand in hand with investing. Compound your time, compound your dollar, compound your time. This compounding business is real, and It's in all facets of life.
Amen to that, man. Well, I think this is probably a pretty good place to wrap it up. You want to
Perfect.
send us into the end zone?
I do. I want to say this. We are just about at 1,000 subscribers to the
so
deep
close.
end. And so, first and foremost, thank you to everybody who has already joined the deep end community. Ryne and I are so happy every week to jump on to these calls. We both look forward to them. And it's because of all of you. We love reading through the comments. As you see, we respond to them. So definitely comment below with your thoughts on this episode. We got in a lot of deep stuff here towards the end. But if you are someone out there who hasn't yet subscribed, join the deep end. Jump into the deep end with us. We're only just getting started here when it comes to what we have planned for this community, where we want to take it. And so I want you all on the journey with us. Again, if you're someone who's tuning into, these people always crack me up. They tune in every episode, but not subscribe. Come on, man. What do we got to do? So subscribe if you're not already subscribed to the deep end. Investors, until next week, we will be around answering those comments, but we look forward to jumping back on to have another deep end chat. And until then, we'll catch you all there.